correct. We raised $6.1 million last week, net of to company $5.5 million. It was a very successful fundraise. We did it in a couple of days. And, as we've said before, in our business, both on the renewable energy side and on the oil and gas front, has developed dramatically over the last 5 years.
All right, welcome back inside our proactive newsroom. And joining me now is Adonis Pouroulis. He is the CEO of Chariot. And Adonis, it's great to see you. How are you?
Hi, Steve. I'm good. Thank you for having me here.
Yeah, excited to have you along. I know the company has successfully raised about $5.5 million, so a strong raise from the company. Tell me a little bit about it and sort of the reasoning you do it at this time.
Yeah, that's correct. We raised $6.1 million last week, net of to company $5.5 million. It was a very successful fundraise. We did it in a couple of days. And, as we've said before, in our business, both on the renewable energy side and on the oil and gas front, has developed dramatically over the last 5 years. But in both cases, renewable energy and upstream oil and gas, there have been shifts in the macro world with regards to these businesses. And over the past 5 years, each of our businesses have basically created their own business plan, got their own momentum, and are on different trajectories. And so we thought now is the time that they've both got critical mass and momentum would be to split the businesses apart. And hence, we needed a bit of a fundraise to allow this to happen and to further progress both sides of the business before it actually happens.
So, Adonis, talk to me about the two businesses and how they're going to move forward. Are you looking to have them move forward at the same pace together, as one ahead of the other? How do you see it sort of shaking out in the years to come?
Well, they're going to be two public companies, is the way we see them, with dedicated and focused management teams. On the oil and gas front, we've got this, footprint in Morocco, offshore Morocco and onshore Morocco. And what is important, and one of the catalysts behind doing this split now, is that we managed to secure our interests back in Morocco. We're back as the operator, and we've gone back on our offshore assets to 75% equity ownership. We have drilled 3 wells on the onshore gas field, which forms part of our Lixus concession, and all 3 wells hit gas. The first well, very successful. The second well, Anchois 2, also very successful. Last year, we drilled Anchois 3, which wasn't as successful, but I want to stress, we found gas. It just wasn't of the volumes that we anticipated. So we know we're in an active hydrocarbon system, and our work now is to redesign that development, maybe have it as a slightly smaller development than was planned last year, and to work with our partners in Morocco, ONHYM and the ministry, to see how we can go forward and develop this project. That's carrying on the oil and gas side. We have a back and right into Namibia, which is today probably the hottest area when it comes to oil and gas exploration. And we have this back and right in the Orange Basin that we've had for years. We're looking to resecure our position and grow further in Namibia. But I think, Steve, the big change as well with us on the oil and gas front, and what people are going to see, is that Chariot's DNA and its history has been really exploration focused. That's going to change now. We're moving towards a world where we'll have assets that we want to bring into our business over the next 12 months that are near production or in production. And I know shareholders are going to say, oh, how are you going to fund that? That's the first question. Well, we're going to do it exactly the same way we funded some of our renewable energy businesses, in particular, our trading license, where we funded the assets on the subsidiary level. And that's how we're going to grow our oil and gas business. So you're going to have the full gamut within the next 12 months: exploration, near-term development, and production. So a busy road for the next 12 months. On the renewable energy side, which we say is going to stand alone, we've got 2 aspects to this business. We've got generation assets, and we've got an electricity trading license called Etana. We've got about 400 megawatts, which is near development of wind and solar with tier 1 assets. And that's mainly in South Africa, but we've also got renewable energy assets supplying mining companies in South Africa, Zambia, and Zimbabwe. I think the key thing for us on the renewable energy business is this electricity trading license called Etana, where we managed to build a balance sheet of $175 million around it. It is fully financed We funded that on the subsidiary level with key partners like Norfund, Standard Bank, BI, Garanco. And what's important is that business is fully financed going forward. So our renewable energy business has been funded on the subsidiary level. Going forward, it has a great future as a standalone business where you've got generation from wind, solar, and sometimes battery power that will be traded through our own electricity trading license in many cases. We also have a green hydrogen business that's in Mauritania, and we're in partnership with Total there. Green hydrogen has been a bit quieter, over the last few months, but we've got our foot in the door there, and I have no doubt that the green hydrogen business is going to come back.
Okay.
So those are the two businesses.
So Adonis, I would imagine now with two separate businesses, investors have an opportunity to really watch both companies grow.
Absolutely. So the idea is as we split the renewable energy business apart, shareholders will get a share in the new business as well, and they'll get that proverbial two bites of the cherry. And you've got two very healthy businesses that have got their own business trajectories going forward, growing along the path that they would have grown if they were in one company, but better because they're focused in their particular fields. And so we hope to also attract new shareholders into both businesses, some that prefer oil and gas or some that prefer renewable energy businesses. We've got two offerings that cater for different groups of shareholders.
Adonis, it's going to be a very exciting times ahead. We look forward to following your story. Thanks very much. Good to see you again.
Thank you for having me, Steve.
All right, there's Adonis Pouroulis. He is the CEO of Chariot.